What if I told you that by the end of this video you're going to be able to change these types of losses into these types of profits? I've managed to get a win rate of more than 90% implementing this strategy, and I'm also confident that you, yes, I really mean you, are going to be successful using this strategy that I'm going to tell you today. Wait a minute. Did I just guarantee you success using my strategy? I think I'm gonna have to take that, because like I always say, forex trading is very risky and may not be suitable for every investor. Hey there, my name is Cletous Ngoma, and if you want to be the next person giving a testimonial like this one after implementing what I teach, then I advise you to stick around and watch this video until the end. If this is your first time watching my content from YouTube, don't forget to subscribe and turn the post notification bell on. That way, each time I upload a new great video, you will be the first to be notified. Okay, enough chit chat. Let us just get into the video already. So today we are going to talk about the best way to analyze your charts using the H4 time frame, and then we are going to go on and discuss where you are supposed to be expecting reversals, in other words, where to look for reversal patterns, and lastly we are going to discuss the proper technique of entering, or in other words, finally taking the trade. Okay, so when I'm analyzing my charts, I start from the H4 time frame, and it helps me to identify the current market structure. What I mean by that, in other words, is I'm trying to identify whether I'm in a trending or a ranging market structure. Then I will go on to my H1 time frame to try and identify the only top 2 reversal patterns that you need to know. I've already done a video on these reversal patterns, and if you're on YouTube, you can check it out by clicking on this card right here. And lastly, for our entries, right, I will use the M15 or the M5 or the M1, but for the purposes of this video, I'm just going to use M15 entries. Okay, so we are going to start with the trending market structure, and one thing we are going to appreciate is the fact that a trending market structure can be categorized into an uptrend and a downtrend, right? So we'll start with an uptrend and then we'll go on to identify a downtrend. Now we can all see that this is a clear uptrend, right? We don't need to find someone with I don't know what kind of trading knowledge, right? But anyone, if you are to pick anyone even from the street, he will just tell you that the market is trending to the upside. Now what else do we see when we are in an uptrend? So let me use something like this, right? We are going to see a continuous break of previous levels of resistance. Right here you can see that we had a resistance, market pulls back, price action pulls back, and it breaks this previous level of resistance, right? Again we get this one, right? Market gives us this resistance, it pulls back, it breaks it again, right? We can also see that we also have another one right here. Market price action pulls back, breaks it again, and the cycle continues again and again and again, right? So this is the telltale sign that we are in a what? We are in an uptrend. Now for a downtrend, right, it is now the opposite. Instead of seeing market breaking previous levels of resistance, now in this case we are going to be seeing the market or price action breaking the previous levels of support. Like in this case, right, we can all see that the price action is continuously breaking the previous levels of support, and we then know we are now in a downtrend. This was the first level of support. Market pulls back, and instead of breaking this previous level of resistance right here, it decides to break this previous level of support, and then we already know that we are no longer in an uptrend, but we are now in an uptrend. It continues to break these previous levels of support until it gets here, right? If I'm to put a line, right, until it gets here, and then it pulls back. And now I'm now thinking that volatility 10 index, right, you can see we are on our H4 time frame, is now back to its uptrend market structure. Why? Because this one was our previous level of resistance right here, right? And we can see that the market broke it, pulls back, broke it, pulls back, and it's still respecting this previous level of support, right? And I'm thinking that it's going to continue to the what? To the upside. Now, when we are now in a ranging market structure, as can be seen on volatility 75 index right here, right? You can also see we are on our H4 time frame, right? And we mark these levels of resistance together with these levels of support. Now, it's now a little bit different from a trend market structure in the fact that when we are in a range market structure, price is looking as if it is moving in a straight line without no clear direction to the upside or to the downside, and you find out that it will continue to respect previous levels of support together with previous levels of resistance. Like in this case, we can see that the market continues to respect these previous level of resistance, and again it respects this previous level of support. And then we can already know that during this time, right, volatility 75 index was in a ranging market structure. And if I am to ask you, where do you really think in this ranging market structure will be the best place to take your entries? All right, I will give you 5 seconds. Yes, just like you guessed, the best place to enter is near these levels of resistance and near these levels of support. What about in a downtrend like this one? Where do you think is the best place to take your entries? Again, 5 seconds. All right, so just like you guessed, these will be your best places to take your trades. These will be your best places to take your trades. But then another very important question to ask ourselves is, how exactly do we know where these reversals are going to happen? And it's very simple. We are going to use reversal patterns on our H1 time frame. Remember, we talked of the only 2 types of reversal patterns that can give you a 90% chance of catching every reversal pattern. You can check out these tutorials by clicking on this suggested playlist up here. Okay, so when we go to the H1 time frame, right, you can see that we are now on volatility 10 index H1, right, and we want to identify these reversal patterns. I've seen that these forex reversal patterns that present over the course of 2 days instead of 1 will produce much greater chance of you nailing these reversals. This is what I'm trying to say. We can see that we were in an uptrend. The market is continuously breaking these previous levels of resistance. We get our pullback, right, and we get this first peak on this day. This is a period separated, as you can see, and then our second peak the following day, and then we take our entry and we enjoy our profits. Now, finally, when we go on to our N15 time frame, we are going to use the 13 and 50 moving averages to confirm our entries. But if you are to ask how exactly we are going to enter, we are going to use the moving average crossover entry technique, and it is implemented in just 6 easy steps. Step 1. Price reverse away from this double bottom pattern and close above the 50 moving average. Step 2, the 13 and the 50 moving averages cross. Step 3, price pulls back to the 50 moving average. 4, price closes above the 13 EMA. Step 5, you click buy and you place your stop loss 10 pips away from the previous level of support. And lastly, you wait and just see the magic. So the opposite is also true, right? For a downtrend, you get your step 1, 2, 3, 4, 5, 3, 4, 5, and finally 6. What do you think is the proper technique of entering in a ranging market structure? Let me know in the comment section below. In the meantime, you can watch more of my videos right here.